is higher today, but if you take a look at an indicator known as the short-term cost basis, the average buyer over the past 5 months is actually underwater until Bitcoin hits about $47,000 a coin. And Bitcoin is up today slightly, but still pretty far below that. And I mean, just look at the moves that we've seen today in the wake of CPI. You can see Bitcoin at one point fell or erased over $30 billion in market caps minutes after the CPI data release. Now it's rebounding up about 2.4%. And let's get into the why with
I don't get it,
Juthica
Katie. I
Chow.
don't get it.
You
I don't
don't
get
get
it.
it? I mean, I don't
I don't
get it
get it.
either. That's why we bring on experts. We are thrilled to be joined by Juthica Chow. She is the head of OTC trading at Kraken. And Juthica, on a day like today, and I know you can't really say too much about intraday moves, but how do you make sense of the price action when you see these kind of moves intraday?
Well, I think part of what's started to happen when it comes to macro data and Bitcoin moving with the broader markets is that it becomes self-fulfilling a little bit, where over time, we've seen some of the dynamics where Bitcoin is moving with the market. It's not really anti-correlated. And I think that leads to more and more folks who are actually looking at trading opportunities to trade that correlation. And so you see right when you get a number, Bitcoin is sold off right away. But really, there are still a lot of idiosyncratic factors at play. There are a lot of flows that are specific to Bitcoin and cryptocurrencies that don't necessarily apply to the broader market. And so now it is interesting. You kind of have the interplay of the two dynamics of what's going on in the global markets and the specific factors and drivers of the Bitcoin market at play. And that's kind of, I think, what we're seeing with today's price action now back up at 45,600.
And
Well, Juthica, go ahead, Katie.
No, Tim, please, you go ahead.
Okay. Yeah, I mean, it's hard because we're like on opposite coasts right now, Katie.
Yeah.
So we don't we don't have that connection that we always do.
I gotta say, I miss you at this exact moment right now.
Oh, thank you. I miss you too. Don't worry, I'll be back on Monday. Hey, Juthica, I'm wondering though about the relationship between inflation and Bitcoin, because today I think we just have to throw that narrative out the window, right?
Well, I think it's going to be a slow playing narrative in terms of how it actually factors into price and adoption. So I would say, definitely we're seeing on the institutional side that over time, institutions are substituting typical inflation hedges like gold and commodities with Bitcoin and cryptocurrency. There's no question that that's happening as part of portfolio diversification, happening as more of a direct play, hedging against inflation, happening when they are looking at risk on and where they want to put their capital to work. But that is a much slower playing dynamic, and I think that will happen over time rather than some of the shorter term, maybe higher frequency traders that are allocating in and out to capitalize on some of the moves over the course of an hour or so. So yes, definitely, if your time frame is much higher frequency over the course of minutes and hours, then the correlations look very different than how I think we would anticipate they would look over time once folks are kind of contributing capital back into risk on assets.
And Juthica, today is fun because the line went down, now it's going up. You're finally seeing a little bit of turbulence, but it's felt like all the action so far this year has actually been in the stock market, that stocks have been more volatile than Bitcoin. And I put some numbers to it. I was looking at the 5-year history of both the NASDAQ 100 and Bitcoin's price, and looking at, the standard deviation levels. And so far in 2022, the NASDAQ 100 has posted a one standard deviation move or higher 10 times so far this year. That compares to 5 times for Bitcoin. So the data actually supports me here, which is nice. But I'm wondering what you make of that idea that right now it seems like stocks are the much more volatile asset class.
Well, I mean, I think it's a sign of maturity of the Bitcoin space. Bitcoin trading at maybe a 6 in the vol in the 60s. I think VIX maybe hit 30 a couple of weeks ago. And so, that even coming down to a 2x multi is kind of on the lower side of where it's been for a while. And so it's really a testament to, even though cryptocurrencies are early and Bitcoin is early and it kind of feels volatile because it had that 30-ish 50-ish% drawdown. I think it's a testament to the fact that it is becoming more institutional, it is becoming more stable. And even though it kind of moves with the broader market, it doesn't really reflect that very high level of riskiness that maybe, for example, tech stocks would have as compared to the NASDAQ.
So definitely could be taken, as a sign that the asset class is maturing. But someone did raise the point to me on Twitter, actually, that the fact that you do have crypto volatility converging with equity volatility kind of takes the appeal away from Bitcoin, that it's not as much fun to trade. A lot of traders flock to this asset class because it is so volatile.
I mean, I think definitely trading opportunity at the end of the day, the very short term, higher frequency traders will always go to the volatile parts of the market. And I think that's part of the reason that in 2017, dating back to that crypto rally, I think that bull run, part of the reason we saw such interest in cryptocurrencies was because the stock market was really quiet. VIX was like between 10 and 12 at the time, and people were just looking for new assets to trade. And certainly, as there's opportunity in the broader market, that will take away a little bit from allocating capital towards crypto, because at the end of the day, Bitcoin is the size of one large tech company. It's not necessarily going to be able to produce the returns that some of these larger high frequency firms may look at. But again, I think it's just a matter of time scale, and that really is more for the more frequent traders. There's a whole handful of institutions that are in it for more long-term portfolio allocation.
Juthica Chow, head of OTC options trading at Kraken. Thank you so much for joining us here.
Thank you.
Really appreciate it.